Hey guys, Jimmy Noble here, a team leader in the Noble Group at Execuhome Realty. Wanted to get this video out because it's very important that people do this the right way. I want to tell you how to stop paying your mortgage the right way so that you don't get into any trouble later down the pipe. A lot of us have heard about a forbearance, and in the description below, I'm going to give you an NPR story that was done, and they had some people that went through the forbearance process with Freedom Mortgage. And I'm also going to link a letter from the Fed. It's a 5-page PDF, so you can get all this information straight from the sources. I'm not a lawyer, I'm not a CPA, I'm not an accountant. This here is for entertainment purposes, so don't sue me. I want to make sure that you get this information and you know what you're getting into. So forbearance, this term that we've heard where they say, hey, just call your bank, you can get 3 months off, no problem. That is correct, but the way that it's being pushed by a lot of banks is that they're allowing people to make no payments for 3 months, but then on the 4th month, your payments from month 1, month 2, and 3 are all due. Then if you can't make it at that time, you're going to have to go through a modification process, which I've been selling houses for a long time now, and I can tell you that modifications are never as good to go as people think that they are. They're usually a mess. So to make sure you do this the right way, don't trust that tier 1 person at the bank that you're talking to. You know, don't trust that what they tell you is going to be what it is. Because if you guys have ever played the customer service game, if you call 3 different people at the bank at that tier 1 level support, you have a very good chance of getting 3 different answers. And you can look on YouTube and find there are people who called and recorded the conversation, and they got different answers from different people from the banks. So know what you're looking for. The forbearance that people are actually looking for, which is the banks acting in good faith, working with the borrower. The borrower is the person who borrowed the money and who makes monthly mortgage payments. That's you if you're making a mortgage payment. The borrower is supposed to have the bank working with them in good faith, but the banks aren't necessarily putting the borrower's needs first, because they're a business. They're trying to survive as well. You know, I mean, you're the borrower, that person that you're talking to is the servicer, and then they have money that they've got to pay to the investors. So there's a whole butterfly effect with this whole thing. So here's the right way how to do it so that you don't come into trouble 4 months down the pipe. The way that you want to do it is you want to make sure that when you're talking to that bank representative that you ensure that the money is going to be, that the 3 months payment is going to be tacked onto the end of the loan, so that when the 4th month comes up, you just start making your mortgage payments again like nothing happened, like nothing changed. And instead of your loan ending at a 30-year mark for a 30-year fixed loan, you're going to make 3 additional monthly payments, you know, after that. Because what you don't want is to just trust the person that you're talking to in the bank and sign whatever they send you without reading it. So make sure that they send you documentation, make sure you read it, and it says what you think it says, that money is going to be tacked onto the back of the loan instead of being due at the month 4. So if you've got any questions, give me a call. I'm always here on my cell. It's 410-258-0566. Thanks so much, and good luck to you.